Alright, perfect. You got the heading? Great. First things first is obviously background information and theory regarding what these things are. So if you look at the textbook, there's a little block here that describes what a financial statement is. Okay, before I read it, can you give me your view? What is a financial statement? Just general.
Just records the end, like all the accounts and the end balance.
Good. For what period?
For the year.
Good. Okay, so if you want to summarize it, you can just say reports showing performance over 12 months. Right, the textbook says a full set of financial statements generally produced in line with certain rules, which is produced at the end of each financial year. Although they can be prepared at any time that managers or owners may require them, they need to be provided for at the end of every financial year. So it's a very long statement.
Report showing
performance over 12 months. That's good enough. Okay, what are the different financial statements? Here you can label them 1, 2, 3, 4. Number 1 is over 12 months, yeah. Right, so what statements do we get? You know what they are. What do we get?
Financial statements. Or income statements?
Yes, let's start with that one. Number 1, income statements. You can just say, see chapter 17. Okay, the one that we just looked at now, you drew up an income statement. You can just say, see chapter 17. Okay, you don't have to redo what you just did. Okay, yeah, perfect. Income statements. Just put a little study note for yourself. See chapter 17 example. We did it there. You drew it up. Sales, cost of sales, gross profit, other expenses, all of that. Okay, good. Number 2, what else do you get besides the income statements?
Statement of financial position.
Good, that's number 2. Nice. Okay, I'm going to find the one that you did previously. You drew up the assets and liabilities. I don't know if you also remember that. Here's it. What chapter was this? Okay. Remember this?
Yeah.
Okay, you can say, see chapter 14. Right, so again, no need to redraw what you've done, just reference it. Okay, because you would have studied chapter 14 before chapter 21. Okay, good. Alright, what else do they give you in the textbook? Let's see. Oh, okay, they did talk about drawings, and they spoke about the management and stewardship again, because that gets calculated in the owner's equity. So this can be a separate bullet. So
okay.
You've got 1, 2, this is number 3. Statement of changes in equity. I see you're not required to draw up the statement in detail. So it's a very simplified statement showing the capital and drawings. It's nothing too much to worry about in terms of structure. It'll probably be more important later when we look at like partnerships and things like that, because then you would want to see what each partner has in terms of worth and so on. Changes in equity, good. Okay, underneath that you can just say capital, drawings, and profit and loss.
Okay, capital, drawings,
and profit and loss is recorded here because you're calculating the owner's equity. Okay. Yeah, capital is 1, drawings, profit / loss. Next to it, you can just say in brackets income and expenses. Okay, we've kind of spoken about this before when we did basics. But remember the accounting equation? What is the equation? It's A equals OE plus L. Do you remember that? Mm-hmm. Assets are here, liabilities are there. The other 4 accounts are here in terms of owner's equity. Remember that? Mm-hmm. Okay, so that's what you're doing. Next to profit and loss, just put a bracket, just say income and expenses. Right, so now you can see all 4 of the accounts. Assets and liabilities on the financial position, capital, drawings, income and expenses in owner's equity. Okay, next bit. Preparation of financial statements. You can just say preparation. Okay, the textbook talks about different systems. For example, purchases and sales, wages and drawings. These are all different words or accounts that will be disclosed in certain places in order to calculate profit. Okay, so preparation of statements. You can say number one, periodic / perpetual, and then we'll group it. We'll put the important bits under there. Okay, so the first thing that we need to look at, when you prepare your statements, you need to check. Did they give me periodic or did they give me perpetual? If they give you periodic, do I need to do a calculation for cost of sales?
No.
For periodic?
Yeah.
Yes, you do. Okay, for perpetual, no, I don't. Okay, so perpetual periodic is important. Maybe underneath the word periodic, just say NB formula for cost of sales under periodic. Periodic is probably more difficult to do because it requires the formula. So probably 7 out of 10 questions will probably give you the periodic system.
Formula for cost of sales?
Yeah, for cost of sales. Do you still remember what the formula is? Let's test you.
Carrying value.
No.
Formula for cost
of sales.
Cost
of sales equals?
Sales.
Opening stock.
Minus opening stock plus purchase.
There we go, that's the one. Okay, so let's recap that actually, because that is important. Maybe just put the formula underneath that. Okay.
So it's
cost of sales equals opening stock. No, not minus, plus, yeah, plus purchases. Minus purchases returns. What else? Remember? Plus other costs like carriage and purchases, etc. Okay, so other costs, and then you've got the minus. Yeah, you can put an example there, carriage on purchases, and then less closing stock. Yeah, just be careful when if you just write carriage, because carriage on sales we don't include. Carriage on purchases we do include, if that makes sense. Okay, so just be specific, because sometimes you can maybe want to use both carriage on sales and carriage on purchases, but you're not supposed to. Okay, good. Alright, so that covers the preparation. They spoke about where to show the different things. So let me just test you verbally. Where would you show machinery? Which statements?
Financial statements.
Yes. Where would you show carriage inwards?
Income statement.
Yes. Carriage inwards would be income statement, part of the cost of sales. Do you agree? Okay. Where would you show wages?
Income statement.
Exactly. Okay. So see, that's just basics, which you already know. Okay. Alright, there's a worked example here. Look at the income statement. We already did that. We did that in chapter 17. Okay, so that repeats. Let's see. Page 171, capital in the statement of financial position. Okay, this is different. This is something additional to the statement of financial position. Here you can write a note about this. Okay.
Okay, so this is for?
The heading here, capital in the statement of financial position. Okay, so when you do disclose capital, we need to show a small little calculation because it looks at the owner's equity.
So capital, this is the heading? Or?
Yeah, it's a heading, capital in the statement of financial position. It's just a working that looks at the presentation of owner's equity in the statement of financial position. Yeah, capital in the statement of financial position. Okay, there's no example here, so we'll create one. And then they talk about errors again, which we've looked at, and that's it. Okay, another chapter. Right, perfect. That's the heading. Okay, you are going to need an example for this because it doesn't make sense if there isn't one.
Okay.
So just put e.g.
Okay.
Opening capital equals, I'm going to keep the number small, not so big. Opening capital equals 1,000. Okay, next point. Profit for the year equals 700. And then you need one more point. Drawings equals 200. Right, so that would be the example. Obviously, different businesses will have a different amount of drawings, profit, and capital. Okay, but you start with something. So what happens during the year? You operate. Okay, who gets the capital? The owner. So now the question for this example would be, what is the closing capital? That would be the question. Right, so if you're calculating the closing capital or the capital at the end of the year, how are you going to calculate that? Any idea?
So say opening,
Yes?
plus profit minus drawings.
Exactly. Okay, but the format is going to look like this. So try and lay it out the same as this. Okay, so write a heading, put it in, and then write down add profit for the year, write it down, and then show the this like total, and then less joined, and then total. Okay, so just stick to the format here, because if they test it, they'll ask you to do it that way. Okay. Okay, so just like we've got there, obviously ignore the numbers. Use the numbers that we've written there. They're easier to calculate instead of all of these. Okay, the format is what you want, so just copy that as is. Opening capital, add profit, minus drawings. It's 5 lines, I think. 1, 2, 3, 4. Yeah, 5 lines.
Oh, wait, sorry, I mustn't use that. Sorry, opening capital.
Yeah, just forget about these numbers. Don't look at them. Use your numbers. 1,000. Yeah, add profit. Yeah, that's it. And then obviously closing capital is the last one. Okay, so take your numbers. Where are you going to put the 100? The 1,000. That's a single line. And that covers this. And I think that's all of it. Let's see. Yes, but then there's just one other note about corrections of errors, and I think we did do this as well. Let me go back and see what's the chapter called.
Can I just see something else?
Yeah. Suspense. Suspense, chapter 11. Yeah, so you do a subtotal, which is 1,700. Then you have to show a bracket because it's a negative. I think I gave you 200, hey? Yeah.
Yeah.
Okay.
200.
And then 1,500. And that'll have a big total, like line. Okay. Alright, happy? Good. Okay, so you've got that. That's just a note about disclosure relating to the equity. Okay, so if an owner has equity in the business, yes, you disclose the statement of financial position, but you've also got to probably work it out. Right, and that's kind of what they're doing in the next chapter, which is that incomplete record story. Alright, there's still a bit more that we need to look at here. Heading. Okay, so this you can do on a new page. It's kind of separate from this, but kind of relates to it as well. We actually have looked at it before, chapter 11, which was suspense accounts. But I don't know how much detail we looked at there. Let's just see. Maybe we could just add to it. Let's see, where's 11? Here's 11. Yeah, correction of errors. Yeah, I thought so. That was covered before. I see it's come up again here. See, correction of errors. Correction of errors. Alright, so it was literally a page. Well, 2 pages, if you look at the example, in chapter 11. It's more pages here. It's 2 pages. Okay, so they've given a bit more, which is good, because generally you are going to have to identify what to record where in different scenarios, and sometimes they can give you a scenario where you would have to try correct a set of accounts that they've given you in the exam. Okay, it's possible. It's not a separate chapter, but just a separate heading. Okay. You can call this correction of errors, in brackets financial statements. So we're not correcting errors in terms of T accounts, because if it was a T account, then you would have a suspense account. Okay, this is a correction of error when we have the actual set of financial statements. So it's a slightly different consideration to the one in chapter 11. Yes, they're similar because they're still errors, but these are errors on the financial statements. Theory-wise, the textbook says, any errors occurring in the double entry system will generally have an effect on profits, assets, liabilities, or a combination of the 3. Okay, so what can we do to summarize that? Well, transactions or errors are like any other transaction. We need to identify them, analyze them. Okay, so bullet number 1, always analyze the error the same as you analyze a transaction. Okay, so what we've done for a transaction is the same thing as what we would do for an error. Okay, you don't undo what you've always done. Okay, it's basics. Right, so we analyze the transaction, the error, the same as a transaction. Right, so how did we analyze transactions? Do you remember? 100%. Okay, so underneath that you can just write down debit question mark, credit question mark. That's what you're going to do in terms of analysis. Right, so always remember, even if it's an error, you need to analyze what's happening. Okay, you need to know what should I have debited and what should I have credited. Second bullet, look at the error before looking at the correction. Right, because can you fix a mistake if you don't know what the problem is? No, you can't. Okay, step number 1 is to admit there's a problem or a mistake. Then step number 2 is to see, well, what did I do wrong, and then let's fix it. Okay, so that's how we've always done it, and we will continue to do it that way. Okay, so look at the error before correcting it. That's very important, because the correction is easy if you know what the mistake is. Okay, great. Let's see, anything else here? Okay, they've given you a worked example here looking at correcting errors. Let's do one. Okay, let's do e.g. example, just to show you how this works. Okay. Example. I'm going to pick a shorter one so you don't have to write too much. Let's use number 3. Okay, so number 3 says, fixtures purchased for 2,340. Fixtures purchased for 2,340. recorded in the PJ.
Purchase for?
2340. Recorded in the PJ. Okay, we'll abbreviate PJ, Purchaser's Journal. If you want to write Purchaser's Journal, that's also fine. It's up to you. I'm just trying to keep it shorter so you don't have to write too much. Purchaser's Journal. Okay, let's look at that. Right, so what did we say we needed to do? Analyze the transaction like how we would a normal transaction. Okay, so what happened here?
It was in the wrong account.
Good. You purchased fixtures. What are fixtures? It's part of equipment, right?
Yeah.
Okay, unless you're in the business of selling fixtures, which you're not. Okay, this business is, do they say? No, they don't. They just say Diva. Diva Talwal. Diva Talwal is the business owner. They don't say what they do. Okay, but obviously fixtures would be what? An asset. Do you agree? Okay, that's important. Good. You see, you're even underlining the correct stuff. Okay, what are fixtures?
Expense. No.
Yes, fixtures are an asset. Purchases are an expense. Okay, so you've captured an asset as a expense. Where should you have captured fittings? Not fittings, fixtures.
Fixtures should have been
on the debit or credit side?
Debit side.
Debit side, good. Should you have recorded purchases?
No.
Why not?
It's not part of fixtures.
Because they're part of fixtures. Okay, so see, there's analysis. Right, so if you're looking at, first, look at the error before the correct step. So let's write down error. Just write down error equals, or error as a little subheading. Okay, so I'm just showing you how to approach these. It will apply to different scenarios, but this is what you would always do. Okay, so what is the error? What did you debit? What did you credit? So now look at what they did wrong. What did they do wrong?
They reported fixtures as purchases.
Good. So the error would have been what? Debit the purchases, credit the creditors. Do you agree? Okay, let's write that down. Debit purchases, credit creditors. That's the mistake. We don't want that. We want the correct entry. Okay, so error is that. Take a different color and write down correct transaction is, and then we need to look at the correction. Right, so what should they have done? If they had to go back in time, what should they have done? Debit what, credit what?
Well, if they fixtures.
Oh, you wrote credit fixtures.
Oh, sorry.
Creditors. Okay, because remember the error was capturing it in the purchaser's journal. And if you think back, a purchaser's journal is used to record credit purchases. Do you agree? Okay. Alright, that's better. Next, what should they have done? So when they buy fixtures, what should they have recorded?
In fixtures, debit fixtures.
Good. That you can write in purple. Right, so now thinking back, had we done it correctly, we would have debited the fixtures and credited the creditors.
Yeah.
That stays the same.
Yeah.
Okay, so do you see why we're looking at the mistake and then looking at the error? Because now we'll look at how to correct it. Does that make sense?
Yeah.
Okay, so now are you happy with creditors?
Yeah.
Yeah, so you can even tick those two. Okay, because you don't have to redo what you've already done. Does that make sense? Okay, are you happy with debit purchases?
No.
No. So what are you going to do to get rid of the debit purchases? Exactly. So this will be the correcting journal entry. This is the important bit.
So debit
the fixtures, credit the purchases. And this is the big, this you would like bold, circle, underline, highlight, because that's what you actually had to get, but you got that from having interpreted the mistake and the correction. See? There's it there. Okay. Alright, so when looking at errors, the process is very important. We need to identify our mistake first. Okay, that's how you do it with anything. For example, you're probably practicing your driving, I guess, right?
Yeah.
Yeah. So obviously, if you're practicing driving, you're not going to be driving the first time you get into the car. No one does. Okay, everybody has to practice driving because that's a different skill. But as you do more of it, you get better at it. But the thing is, you need to identify what the mistake is.
Yeah.
Okay, so maybe the first time you get into the car, you're putting a bit too much petrol, okay, and then your clutch comes up too quickly or whatever, or too slowly. Or you're not putting enough petrol and the car stalls.
Yeah.
Right, so now you know, okay, what was my mistake? Ooh, too much petrol, not enough petrol. And then next time you improve. Okay, and that's kind of what you're doing here. And that's why I said the process is more important than the actual answer. Because anybody can get that answer if they've got the first two steps. Makes sense? Okay, great. Right, so that's the worked example that they gave you here. What else? Oh, that's it. Okay, then self-test questions, chapter summary. Right, how are we doing? Can we do 22 today or not?
It's 1:30.
It's 1:30 already. Okay, you want to do it next time?
Yeah, please.
Okay, yeah, it is quite long as well, so let's rather save it for then. Okay, so Wednesday, we'll start then with chapter 22. That won't take us that long. I think it was 7 or 8 pages in total. Once that's done, then we'll start with practicing using the assignments.
Okay, cool.
Okay.